The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start the show with something that we usually do, looking at the DAX, the FTSE, and I also put a chart up there, the British pound, because it's at a real critical level here, folks, at this 133 level. So sort of pay attention to it. Remember, when Brexit came, it was at 150. So this is a very interesting spot that we're looking at here in the British pound. Folks, sometimes when I start the day, I start the day with Bloomberg every day, looking what's going on, and I see all the stuff, and some of it to me is embarrassing, being, what I see going on in the news, and whether it's false news or not, I have no idea. That's why I try not to watch it. I just look at the economy as of what's going on. But we have some very, very dear friends across the pond over there in the UK, and they have a TV show over there called Naked Action, I believe is the name of it. And basically what it is this young lady comes out, and she is totally naked, folks, showing all the junk. I mean, it's just right there. And then there's four doors, just like on whatever it was, pick a door. I can't remember which that was. There's four doors there, and there's four guys there showing from their knees, and then each one is exposed little by little, and it's also showing full view of everything. And it's the number one show over there, folks. I mean, I don't know how it works or anything, but we'll see what happens. Anyway, let's move on here, see if we got a caller coming in. Let's make a deal. That's what it was. Thank you, Al. You're the best. Yeah. Anyway, I don't know what kind of deal that is. Let's take a quick look here, what Tommy had talked about before, and that is the Bitcoin. Folks, this is starting to get legs now. I mean, we're almost at the old high, 18,500. The old high was 19,900 in January of 2018 when it went on the exchange. And this is something's happening over there. So these blockchains and cryptocurrencies are starting to get, Mr. Bill, you got me on that one. Bill posted in there, the name of the show should be called The Untouchables. Good one, Bill. All right, that's okay. Yeah, that's a good one. All right, let's take a look at the cocoa that Tommy was talking about in Hershey, where they have that wonderful car show every year. There you go. You can see here we gapped up here about a week ago, Friday. We hit that 2,400. Look how it hit the exact 61% retracement, folks, back in October. Then it comes down and makes another new low exactly at the 78% level, and then gaps above the downtrend line, and then it's been going up every day. I mean, you can't feel sorry for people that are selling in that, because, my gosh, you can see that it's going straight up. So they must know what they're doing. But anyway, we've hit 27.26 today in the cocoa, and who knows where it's going to go, but it's a beautiful technical picture. My gosh, you can see it right there in front of you. There's no mystery there. So just keep that in mind. Now, one of the things, by the way, we're going to have Bill Meridian will be our guest at the break, as always, a great show. And I think we'll always enjoy it like we do. Now, I wanted to taste a little bit here about the market. Let me just get this up here, the old stock market. We're going to use the NASDAQ because that's been the big daddy rabbit. That's been the strongest. Well, the Russell's been the strongest recently, but that's a very small market. You see, we made the three drive to a bottom pattern back there on November the 2nd. Okay, then we rally straight up to make a new high at 12,450. Then we come down to the 61% retracement on the 10th of October. Then we go up to the 61% retracement on the 17th of October. And then this week we've come down and made the 382 of the whole move down, folks. You got to pay close attention to that, because that level there at 11,800 is really important. When you get below that, and if you get below that, that's going to tell you that, yep, the trend is starting to go down. But Right now, that has not happened. It's still very, very strong. And even though the news about the Federal Reserve and all this other stuff has come up, it doesn't mean a whole lot because the market just backs off, 10 points in the Dow. It's not even, hardly anything at all. So keep in mind that, you don't have to pick the top to make a little money. Some of the money is made between that 75% between the high and the low. So you just got to find a place where you can enter and not risk too much. Now, we've been asked to take a look at one of the cross rates that is quite popular over on the European side of the coast. Let's get this over here, get this up here so we can take a quick look at it. This is the Australian dollar versus the New Zealand dollar. This is on a weekly basis, and I just putting the patterns up there and the ratios. You can see that there's nothing mysterious about this. You can go back to 2015. You can see the first Gartley in September of 2016, the second Gartley at 2017. Then you have the 135 pattern coming in 2018, another Gartley in July of 2018, and then so forth and so on and so forth and so on. And look where we are now. What I want to do is to try to walk through this to see if we have a trade set up here in this Australian dollar. We've not looked at this here at TFNN, at least on my show we haven't. So what we're going to do now is to go up and we're going to move down to a daily chart so we can see what we're looking at. This is how I prepare my charts. You'll notice that we had that 3 drive to a top pattern back in June, and the market dropped from 109, all the way down to 105. That's a considerable amount. You'll notice it stopped exactly at the 382 level. We talk about that quite a bit. And it stopped right at the 382, then went from the 105 all the way up to the 106.5 level. And this is what's been going on now since August. So what we'd like to do now is to see where we are. Looking at this chart, you see we're sitting right at the 50% retracement of the whole move going back to March 20, in the third week in March when everything changed. That's when the COVID virus got really bad and the market bottomed, and everybody didn't think that could happen, but it did. But let's take a look at where we are here with this Australian dollar. Now, this could be anything, folks. This could be natural gas. It could be cocoa. It could be anything, because all these charts look alike. There's nothing, any difference between any of them. Okay, as you see this unfold here, you notice that the first move down, the first Gartley stopped again right at the right near the 382 retracement, and then you rally up, made another small Gartley there, and then you're still coming down to this 50% level. What we're trying to do is to show you the case that's saying, yes, this could be a major, major spot here. And that's what we're trying to do, is to see if that's a risk parameter that we can use to see if it's going to be the case. Now, as we look at the last one we're going to look at here, I'm just blowing this up a little bit so you can see it on a little larger time frame, so you can see the ABCDs quite easily. You'll notice the Gartley that occurred back there on October the 5th. It was a perfect ABCD, and that measures down here. It looks like we're going to be bottoming right here where we are now. That's the 50% retracement, or we're going down to that 104 level. That's what it looks like from what we're doing right now. Okay, now someone was saying here, I don't even know what this is. IMTX was given as a buy signal by Merrill Lynch. Well, if Merrill Lynch said it, it must be so. I don't know how to put that in there, but is it a stock? Can you tell me? IMTX? Oh, okay, it must be a stock. Yeah, I'll see if I can pull it up. Yeah, you bet. 10-4.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're taking a look at this, whatever this is, IMTX, or I posted it here that Merrill Lynch came out with a buy on. So I don't know anything about it. All I know is that it can't go below that 78% level. That's pretty much the bottom line. I hope that chart posted. Let's see if we got that up there for sure. Believe we did. Let's get it. Make sure we can see this. Here we are. It's IMTX, and you can see here we're trading at around $10. If it gets below 9, I would say goodbye. That would be below the 78% level. But, it came in at 17, went all the way down to 8. So the people who bought that on the IPO sure took it in right between the eyes. So I would be a little bit cautious on that one. Now, the next one that someone's I think we have a caller calling in this morning. How did he get through? My goodness, the lines were so jammed. From Niagara Falls, I believe.
Hello?
Yes, sir. How are you today? What's your name?
My name is Michael.
Michael, how are you?
I'm okay.
Good. What can I do for you, my friend?
I want to look at the SIBO NASDAQ volatility. Ticker symbol VXN.
Uh-oh. I don't know if I got that one or not, pal. Hold on. VXN?
Yeah.
VXN. Just give me a second here.
The rival to the VIX. It's the QQQ's VIX.
Okay, just to call that VXN. Just one second. VXN. Let's see if we can get this up here and take a look at it. I don't trade these things, so I don't.
Yeah.
I don't even get the data on it, my friend. So I'm sorry.
Okay,
I can't
how about
help
going
you.
on the VIX on the daily chart, please?
Okay, I'll do what I can there. Just give me a second. I usually have that one because I'm usually. I hope I am. Just a second here, Mike. Just give me a second here. Where is this fix? There we go. Get the daily up here, and I think we'll be okay. Well, oh no, I'm all messed up here. It can't be this level. No, this is all. My data is all corrupt. I don't do those volatility things anymore, Mike. So I'm awfully
how
sorry.
about the December VIX futures?
I don't even do that. I don't do any of the volatility VIX stuff at all anymore.
You don't have that on your system?
I do, but I don't know what the symbols are, and I don't want to get, it's just over my pay grade to look at it because I don't trade it.
As a consolation prize, how about silver?
Silver? You can silver this week. This one we can do. Silver is not a problem, and I can get that one up here for you in just a second. And silver just had a big jump here just a few minutes ago, and we have a short position in the gold that we have a big profit in, but it's not, well, silver's not doing very much today at all, is it?
Okay. What's your downside on that? What's your downside projection on silver?
I think the silver could make $18 a share.
18 by New Year's Eve?
No, it would be January 5th at 10:30 in the morning. Mike, I have no idea when that's going to happen. I mean, time is the most elusive of anything that we have. But all I'm looking at here, let's put this up so you can see it. I'm just looking at a 61% retracement of the whole thing down here, right around. It's actually $19. Now, I know that's a big drop, and we've got to get below 23 before it even gets bearish. But with today, silver should be really moving, and it's not. I mean, you just had a big short covering jump in the gold, but why isn't silver moving?
But your ultimate downside is 18, so that brings it back to about end of June, right? End of June, early July, when we had the big major move, the breakout to the upside, huh?
That's correct. There's a lot of support at 23, 22.5 to 23, and if we get below that, then you could be looking at that $19 level. But whether that happens or not, I really don't know. And I don't mean to joke about the time part, because time is really difficult. That's the most elusive of all the things that we look at. So all I try to do is match the patterns, and that's pretty much what I'm looking at.
Okay. All right, then. Thank you very much.
Hey, Mike, I'm sorry about the VIX and volatility stuff, and I will do my homework on that next time, and maybe I can come up with something. Yeah, maybe you can
add it to your watch list.
I'm going to put that on my wish list for 2021. How's that?
Oh, great. Thank you.
Okay. Hey, thanks for calling in, Mike, and stay safe up there, okay? Always nice talking to you. Okay, folks, we're going to have Bill Meridian coming up here at the break here. He's always got some great information. Now, I want to mention here, let's see how high did we get here in this gold, because the 61% retracement was setting up here right there at 1878. That's a very important number, folks, in the old gold market. So let's just get this up here so you folks can take a look at it. We're setting right at that 61% retracement again. So pay close attention to this one. We've got to, we get above that 1885. I'm afraid that the short positions that we have at 1893 and at 1958 will be going to the wayside. But right now, we're right up against that 61% retracement of those last highs. It's surprising that silver is lagging so much, but that's not unusual because it's only 1/6 of the volatility that we have in the gold market. Okay, one other question that someone has just asked, and that is, why does the market stay up given the fact that we have all these things going on in the world? Folks, I don't know. I can tell you this: if you just want to Google, go look at Renaissance Capital. They've been the leader of the pack here for the last several decades with Jim Simmons, and they suffered their worst drawdown in October to the tune of about 20% or $15 billion they lost, and that's an algo trading firm. In other words, the mathematical formulas that they have stopped working during that time period, and he acted like it was nothing, and for him it is nothing. But that's a heck of a drawdown. And he's never had one like that before. So that's a first sign that maybe these markets, the texture of the markets are changing, and with the Fed in there possibly arguing with the Treasury Secretary, but the Treasury Secretary has only got 6 weeks to be in office, so he can argue all he wants. So I don't know how that comes out, but I'm just looking at the charts. All I know is, folks, if we go below 3,500 in the S&P, that's going to 3,540 in S&P. That's going to be the first sign that we've had a pretty good top up in here, because that resistance that we had up there yesterday at the 3,580 is basically very important. The reason why I put that chart up of the NASDAQ, and I put these charts up every day, and I know some people listen to them, some people don't, but this is pretty much the same chart that you're looking at when you're looking at the S&P. And the reason why is, we do have lower tops in here since the 15th of October. So that's the first sign that there's a little bit of a problem coming in here at 11,220 in the NASDAQ. But that's the only sign that you have. You've got to get below 11,800. Now, that's only 180 handles, and that's nothing in the NASDAQ anymore. So, it seems a lot of money, but there's, it's not very much. But when we get below that, then the trend would possibly be turning. But the news is not giving you any indication like that, folks. We're going to have Bill Meridian at the break here, and I think it will be really good to have him and listen. He made a terrific call on the oil stocks, as you remember, a couple of weeks ago, and that was a very, very important one to pay close attention to. If you have any questions, 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Bill Meridian, Cycles Research, Vienna, Austria, on the line. Bill, thanks for joining us today.
Hello.
Hi. We're ready to go, my friend. Thanks for joining us today. By the way, that call you made on that oil sector a few weeks ago, I mean, that was to the day. I mean, that was just amazing to see what happened the next day. You must have a lot of subscribers over there because it really took off.
I didn't even know I did it that close to the low.
I think it was within the exact day, Bill, because I had several people at TFNN tell me about it. So I assume I don't follow those, but that's what they told me. So maybe I'm off by a day, but that's what they told me.
Well, Larry, the best way to make money, I'm pretty sure you'll agree. I bought my first stock when I was 17 in 1966, is to buy and hold strong stocks in an industry or sector that's about to go into a bull market, like technology was years ago. And the gap, in other words, if you measure the percentage increase in the number one group, which is technology, and the percentage decrease in the bottom group, which is oil, it was at a 30-year record gap, the difference between the two. The oil was down about 50% in oil, and technology up about 35%.
Yeah, wow.
And sooner or later it had to turn up, but I've got the fundamentals. I've got it here at the end of the presentation.
Okay. Would you go ahead? You want to start, and we'll move.
Sure. Well,
slide. Just tell me when to move the slide, and I'll move it.
Well, I'm on two. The S&P is to bottom, I think, in this coming week. This week is just a week of consolidation. Bonds are moving lower, gold to move higher, oil is likely close to a low, and energy stocks are nearing or are at a low. So let's just go down to November's bearish for the S&P. This is the same argument I used in September. From 1885 to the present, November is up 57.8% of the time. If it's year ending in zero, it's only 34.6. In election years, it's 60.6. Both election and a year ending in zero, which this November is, it's 33.3%. But we are coming into, if you go to page 4, from November 20th through December 7th, the S&P is likely to rise. There is the Thanksgiving bullish effect. It runs from about 2 days before the holiday to early December. That's about 65% or so. But the day before, which will be next Wednesday, and the day after Thursday are up over 70% of the time. So if you've got spare cash around, if you buy the SSO, which goes up at twice the rate of the S&P, that would be one strategy to employ there. That leads right into the end of month EOM bullish period, which runs from late November through the first week in December, up 67% of the time. On top of that, we have an irregular cycle, which we'll see on the next page. This part of the 13-year cycle is bullish, up 12 of 13 times. It's 92.3%. versus an expected return anytime during the year for that time period is 53.8%. So let's go and see what this is. Jupiter and Pluto were 0 degrees apart last week. I think it was 1 week ago yesterday, about 8 days ago. So if you go to that dashed line in the middle, that is the day of the exact conjunction. And count forward about 8 days, you get Monday, Tuesday. You see the arrow I've drawn. And this happens about, it's happened 13 times since 1885 because these two planets have a 13, 14-year cycle. And so this is added in on top. Now, this is no different. This may sound wacky to some people, but it's no different than saying, well, the market is up prior to Thanksgiving, or the market is usually up in December, because what you're looking at are the dates, and the dates are generated from the calendar, which is calculated by the relative position of the Earth and the Sun, which is my original proposition from many years ago. So now if we go down one more, this is the extraction of all the most recent cycles into a monthly composite, and you can see the cycle's running down and the S&P is up. That if a sell signal fails, well, that's bullish. And here we're coming to a buy signal right at the end of the month. These are weekly cycles, and this was just freshly run. Then if we look at the weekly cycle, which is the next one, you'll notice it bottoms around the same time. And all in the last year, on the monthly, there have been 5 buy signals. All have been correct. Well, the market's been going up, so that, of course, the weekly cycle, all 6 buy signals in the last year have been profitable. And now, just for good measure, we go into this is the 1, the 4, the 10-year cycle, the 1-year cycle being the annual cycle of the year, the 4-year cycle being what's called the election year cycle, and the 10-year cycle being the decennial pattern. and using it zero or down, which is why that green line is falling. If we go down one more to number 9, that's the summary of all of them. And here we see that little blip up where I have the arrow. That blip up is November. Well, you can see November, December down at the bottom, and that is also pointing up. So once you've done all the cycles, obviously everything points up. So what is holding the market back? If you go to the next page, just to give you one example, on the top, that is the advanced decline line. And as you can see, it has hit a new high. But, and I prefer this measure to measure the short term, that is the 10-day advanced decline line moving total or moving average. That's a moving average, yes. And you'll note it is currently overbought. Well, that's like trying to climb up an olive oil-soaked peaked roof that you keep slipping backwards. So if that were oversold, I would be very bullish right here, but that condition is what's holding the market back right at the moment. That's very short term. I think this is the key chart combined with the next one if you want to look at price charts. Notice that
we're on number 11 now, Bill?
11, the S&P 500
yes,
daily.
Okay. Yeah,
you note that formation. You see the blue horizontal line running from 3,200, and then you see another one 3,600. That is a big rectangle. And as technical lore pattern perception would tell us, if it breaks out of the rectangle to the upside, this is bullish, and it should go up by an amount equal to the height of that rectangle. And you'll notice it's broken out to the upside, and it pulled back. That's the price close, I think, from 2 days ago. It does not include yesterday. But basically, it is you're pointing up about 300 points. I'm not saying it's going to go that far, and down a few points. So in other words, you have a very excellent reward-risk ratio right here. And I'd like to add the Financial Analyst Journal, which is the bastion of PhDs in fundamental analysis. They ran a study using fuzzy logic to identify price formations. And the single formation that shows up the most is the rectangle, and the single formation that is the most profitable is the rectangular low. So they've actually confirmed that the rectangle is a very, very potent market pattern and can be relied upon, which I don't think most people realize. Mm-hmm. So that's the technical picture, and I think you should start moving up substantially next week, probably on Monday.
Wow, that's good. Bill, we'll be right back, and we'll talk about the bonds.
Yeah, pay some bills. That's what we got to do. 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Bill Meridian, Cycles Research, and Bill's going to talk to us about Treasury bonds now, I believe.
Yes. Well, based upon the 10-year note, it's a split market. The 30-year bonds are rising, the 10-year notes are falling, which means interest rates short-term are rising and long-term are falling, which is not a positive for the market and the economy, but it hasn't really fully developed yet. But in bonds, the last monthly buy signal failed, and a sell signal is pending for the last week of the month. Now, if there's a buy signal and the bonds keep going down, that's a bearish sign. And I think this may be the reason for the shift in investor sentiment. The world's got a ton of debt, and many investors, I believe, think where this is the next crisis may lie. In other words, there may be defaults. And as one of my first professors at New York University said, I am not only interested in the return on my money, I'm interested in the return of my money. So this may be the cause of the departure between prices and the cycles. Or in other words, there's some much longer cycle taking over here for which we don't have data, or I don't have data. Now, here's the monthly bond cycle on slide number
13.
The next slide is 13.
13, yeah.
And you can see the bonds have been falling while the cycle has been rising. And here we have a sell signal pending next week, just as the stock market cycle's bottom. So this looks pretty bearish. And if we go down one more slide, this is the seasonality. This is the annual. This is the annualized expected return. So you can see October. You can see the big, the very high bar in August, high point of the year. Then October is lower. November, you can see it is declining, and so December certainly does not look strong at all. If the bonds are already down, and the cycle is just hitting a peak, and December is fairly weak, about the third weakest month, second or third weakest of the year. This is a bearish picture. And we can confirm that if you go to the next page. This is the advanced decline line on the highest yielding debt, which is online from FINRA, F-I-N-R-A. That is the bond breadth. And look at the declining series of highs. So that's confirming it's in a bearish trend. And it's probably not going to break above that line in the coming week. So let's switch to gold. Gold on page 16.
Yes, sir. We got the seasonality. Yep.
And there you see the seasonality hits a high in September. It hasn't made much progress. The seasonality is peaking out. But as you'll see, November and December about equally are positive. If we go to the next month, I've quantified the next slide. I've quantified this. In November, up 59% of the time for an average 0.78% return. December, it's lower, 52%, but for a 1% return. January and February, both 56%, either 1.9 or 1.3% respectively. So it's not quite bearish. It's slightly bullish. And if we go down one more to try and get a better perspective, here we have the weekly gold cycle on top. We see it topping December 18th. And then we see the monthly gold cycle topping right here at the end of the month. So I think the gold is going to rally from here short term into December and then start to flatten out, because you'll be then running into what is the weaker part of the year. Is January is usually up pretty strongly, so I think gold is probably okay to hold up until about mid to late January, and then you enter the weak part of the year. The weak part of the year is February through June, or February through May at least. But my guess is, there's either, as I always say, monetary policy, they're either printing a lot of money or a tremendous amount of money. It's one of the two. And if we go down one more, page 19, this is one of the graphs I like. This is actually a daily gold, but I put it on a monthly basis from 1860, and it was the period during which gold was the gold price was fixed from the 30s through the 60s. The gold price in London was taken and adjusted by the pound-dollar exchange rate. That is why we have a continuous series here. And it looks like a wave up one up to 1980, and that long 20-year bear market was wave 2. This rally, wave 3. The correction looks like a classic wave 4, and a wave 5 should take it to new highs. So this is one of the reasons that I can't get too bearish on gold if you believe in Elliott wave and if that's the right count.
Mm-hmm.
So now I think I have the energy stocks.
Yeah, this is the one that you
summary. The energy stocks ending a long bear market.
Wow.
Okay, there may have been eight signals in the past. All 4 buy signals have been accurate, and 3 of the 4 sell signals have been profitable. So let's look at the cycle, and there it is. So obviously the cycle is not bottoming until the end of this month, beginning of December, but it looks like price has already reacted to the upside, and it shows a bull market running into autumn of 2021. Mm-hmm. And this is the timing, but let's look at the next page. Now, these are the fundamentals, and a lot of this comes from Jason Gopfert at the Sentiment Trader service, sentimenttrader.com. The first item concerns, as I mentioned, the magnitude of the drawdown or the difference between the energy sector and the S&P. It is unusual for any sector over the past 90 years to suffer a drawdown that was 35% more than the drawdown in the S&P. The current drawdown is about 60% more than the S&P, the worst of any sector in history. It exceeds the relative losses in both the technology and the financial stocks in their last bear markets. The only other time was energy dropping 35% more than the benchmark was 82, followed by years of outperformance. Now, Larry, you and I have been around a long time. When there's a bear market low, of course, the news is totally pessimistic. It's midnight times 10. It's just pitch black. Companies are cutting employees and have reduced dividends. Active oil rigs collapsed faster than any other time in the last 30 years. According to Bloomberg, there have been 300 mergers and acquisitions in the energy services industries worldwide over the past 6 months, lowest in 17 years. And 1.3% of all M&A activity on average over the past 6 months has been in energy. That's the lowest number in 20 years. And stocks are cheap. According to Portfolio 123, out of 663 U.S. listed stocks in the energy sector, 470 of them have had a share price under $5. This is down from a peak of nearly 80% in March. And no other energy decline in more than 20 years, so more than 65% of these firms with a share price under $5. In the past, when more than 55% of energy companies were below $5, the long-term returns in the XLE were positive. There are actually almost 400 stocks that can be bought for less than $2 a share. You talk about a bear market. And This is oil, the commodity. And you'll note that it is bottoming, and I still have a short position in it, but it dropped very sharply. If you look at, I don't think I have a price chart, and then it's sort of gone sideways, and now it's popped up a little bit, but it's just consolidating, it looks to me. So in other words, in the face of a declining cycle And in the face of weak seasonality, it really hasn't declined that much, which means the next move up should be fairly substantial. I don't know what the fundamental could be, but oil is considered a value stock. Let's look at this next one. This is from the Financial Times. 2 centuries of value drawdowns. Value stocks are at a 200-year low compared to growth stocks. So 200 years.
Wow.
Is a long time.
That was before our time, Bill. Hey, we'll be right back with Bill Meridian. We'll take a little break here, folks. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Bill Meridian of Cycles Research, Vienna, Austria. Bill, we have a question from one of our listeners, and that's regarding the Green New Deal that the AOC group is talking about. Will this affect these things that we've just talked about here, these fundamentals that look so positive?
Well, that's not going to take no, I think the fundamental effect will be negative, and it just hasn't manifested yet. Mm-hmm. And I remember when I was a junior analyst at the Value Line Investment Survey in New York, we had a guy named Art, an older guy, who covered the energy utilities industry. And I said, Art, why don't we have green, solar power? And he said, well, those are all nice ideas, Bill. And he sat down and he showed me how much it would cost. And he said it would be about something like, I forget, multiple times what we were paying for electricity every month. He said, that's how much your electric bill will go up. So I'm convinced that's going to happen over the longer term, and it's going to happen naturally. But I don't think if you attempt to rush it, I think that's going to be, they're going to have to take away from other areas of the economy in order to do that, and it's going to be very expensive.
Yeah, boy.
So that will be a negative to the economy overall.
Okay. Now, one other question. Someone's asking, do you have an upside target on gold, say, over the next 12 months?
Oh, yeah, about sort of in the 2,000, 2,200 range.
Okay, so up another 10, 20% from where we are right now.
About 10 at least, I would think.
Okay, that sounds very good. Listen, we want to thank you for being with us again. And
sure.
Bill, you do such a great job with these 25 slides. It's really amazing the work you put in. And believe me, it is greatly appreciated here at TFNN. So be safe, my friend, and I hope you'll be back with us.
I should be back in Austria the next time you talk to me, I hope.
Yeah, and it's been a long time, my friend. So be safe. Tell Surya I said hello, okay?
I'll do that. Bye-bye.
You bet. Thank you, folks. Bill Meridian, Cycles Research, Vienna, Austria, a really stand-up guy, and he is really a really nice fellow, too. So we'll see you folks on Monday, God willing, and I'm sure she will be. So live every day in an attitude of gratitude, and may God bless.